You've been told a lie about money. You probably think it's printed by the government. The truth? Almost all money is created out of thin air by private banks every single day. It's been called the infinite money glitch, and it's the secret to how modern banking really works. What you're about to learn will change how you see the economy, the world, and the number in your bank account. Section 1. The common misconception, the textbook lie. We all learn that banks are just safekeepers. You deposit your paycheck, and the bank holds it. In this story, the bank takes a chunk of savers' deposits and lends it out to borrowers. They're just a middleman, a matchmaker, connecting people who have money with people who need it. There's just one problem with that tidy story. It's completely wrong. Section 2. The aha revelation, the shocking truth. The reality is that banks don't lend out pre-existing money. They create new money from nothing every time they make a loan. The Bank of England confirmed this in a landmark 2014 report, stating, "Whenever a bank makes a loan, it simultaneously creates a matching deposit in the borrower's bank account, thereby creating new money." When you get a $20,000 loan, the banker just types 20,000 into your account. Poof. New money is created. In fact, over 97% of money in economies like the UK's or US's exists as these digital bank deposits. The cash in your wallet is a tiny fraction of the whole picture. Section 3. The money multiplier explained, the infinite money glitch. So how is this possible? For decades, this was explained using fractional reserve banking. Imagine you deposit $1,000. Under old rules with a 10% reserve requirement, the bank had to keep $100, but could lend out the other $900. When it didn't hand over cash. It created a new $900 deposit. Suddenly, the money supply was $1,900. But it gets crazier. The borrower spends the $900, and the recipient deposits it into Bank B. Bank B then keeps 10%, 9 lends out $810. This chain reaction, the money multiplier, could theoretically turn that initial $1,000 into $10,000. Section 4. The plot twist, how it really works now. Here's the final plot twist. That system is ancient history in many places. On March 26, 2020, the U.S. Federal Reserve reduced the reserve requirement for all banks to 0%. So what stops them from creating infinite money? The old textbook model was too simple. Today, bank lending is limited by different but very real factors. First, and most importantly, capital requirements. Regulators force banks to fund a percentage of their lending with their own money, which acts as a buffer to absorb losses. Second, interest rates. Central banks set a policy rate that affects the cost of borrowing. Higher rates cool down the demand for loans. And third, a bank can't create money unless a creditworthy person or business actually wants to borrow it. Section 5. The implications, why this matters to you. Why does this matter? Because understanding that money is created as debt by private banks is the key to understanding the modern economy. It's what fuels economic growth, allowing businesses to invest and families to buy homes. But it's also a major driver of inflation. When banks create money faster than the economy creates goods, prices go up. This system also exaggerates booms and busts. In good times, banks lend freely, creating bubbles. When fear takes over, they slam the lending brakes, deepening recessions. Most importantly, it means our entire money supply is tied to debt. A world with more money is by definition a world with more debt. The story of money isn't what we were told. It's not printed by a government. It's typed into existence by private banks every time a loan is signed. This system, guided by capital rules and interest rates, is the engine of our global economy, creating both explosive growth and the risk of instability. Knowing this makes you informed. You're now in on the secret. If you want to keep exploring how the world really works, subscribe and hit that notification bell. Let me know in the comments, what's the one thing that shocked you the most? Thanks for watching.